Start that and welcome to all of you folks on. Oops, wait a minute. Got a little error here. All right, now you should be able to hear me just fine. And I started my YouTube presentation, so welcome to all of you on YouTube that are watching as well. It's good to have you. I had a little bit of a hiccup there when I switched over to YouTube broadcasting. All right, Michael and Scott and Janice, welcome to you guys as well. I know I missed a bunch of names when I had the little hiccup there with my microphone. So welcome to all of you. It's good to have you with me today. Do me one big favor here. I'm kind of interested while we're talking, just to kind of clear the air. What time is it by you? I'm always curious to see where people are dialing in from, if you will. You know, the nice thing about these webcasts is we can broadcast them everywhere, and I don't have to travel. I'm sitting in my beautiful home office here in Ohio, and I don't have to go anywhere, which is awesome. I spent like 10 years doing a lot of traveling, 200 nights a year, and I'm married with kids now, so I'm glad I don't have to do that anymore. So it's always kind of cool. All right, Antonio's Montreal, 4:58. John, you're at 2. Janice, 4, 5 p.m. Eastern Time. Michael, cool. I see a couple of 3 o'clocks as well, a couple of West Coasters, California. I see Vancouver, Montreal. All right, cool. So we've got quite an eclectic mix of time zones that we're talking about tonight. I didn't see anything over in Europe. Okay. That's okay. North America's fine too. I see a Utah in there as well. Scott, that was you. All right, cool. Now, one other question before we get started is, what do you do for a living? Are you retired? The reason why I ask is I'm always curious. I'm always curious about everything. I'm a curious person by nature. But the reason why I ask is, when I first designed this thing for VectorVest, it was really more in line for the retirement community for our retired clients. But what I found over the years is we have a large group of people that are still working that want to do this as additional income. So I'm just kind of curious. I see the most people there are retired. I see Michael, John, Scott. I see retired, semi-retired, want to retire. I like that even better. Want to retire. Well, this is hopefully one thing that can get you to that a little bit faster. All right, now for those of you that were chiming in with me, and again, I can't possibly read all the names because they fly by so fast. Do me a favor as we go through the curriculum tonight. Do me a favor and just kind of keep up with that. Ask questions. I've got my co-workers here that'll help answer any question that you have, and then we'll have a formal Q&A at the end. So I see that it is 5 o'clock, right on the nose here, Eastern Time. Let's go ahead and get started. Tonight's webinar is called How to Generate 3% per month with one option trade per week. And in today's webinar, I'm going to be showing you the breakthrough system I developed here at VectorVest that's going to help you generate safe monthly income. And the cool thing is it's in any market condition. Bullish, bearish, it doesn't matter. So the information I'm going to share with you has not only changed my life and my investing style, I've seen it change the lives of so many people. So I hope you're really excited about it. In fact, my promise to you today is simply this. You're going to be able to see in this webinar how you can begin making a paycheck averaging 3% per more or month. Now, that figure is based on the fact that our portfolio and most of our clients are generating an average of 3% per month using one of our most basic strategies, one trade a week. Now, keep in mind, you can do this regardless of market direction. You can do it with little to no prior experience. It's safer than buying or selling stocks outright. And the cool part about this is, and why we can do it so well is, we can make money even if we're wrong. We think the stock or the market will go up and it doesn't, we can still make money. Now, I know 3% per month may seem too good to be true, but the truth is a lot of our clients are doing even better than this. So in today's webinar, I'm going to show you the exact system I use to generate these types of returns. We're going to talk about some case studies and examples of our clients who are doing this month in and month out. And I'm going to show you the system so that if you learn and follow the strategy, you can reproduce it. And I'm also going to prove to you that our options paycheck system will get you better returns safely. Safer again than just trading stocks or options alone. Now I've got a screen capture here. This is from my account. I trade live with my students on Mondays, and this is just one of the trades I've made. So I'm up about 21% so far this year at the end of July. I took this screenshot in the middle of June, and I wanted to just illustrate the one trade a week idea. One trade a week through the beginning part of June was up like 14.2% total. 1.7% in January, 6% or 5.6% in Feb, 5.2% in March, a little bit of drawdown in April, May, June. So what you're seeing is you're seeing consistency here. You're seeing months where you're having really good success, months where maybe it's only 2.5%, even some drawdown. But a couple of things I want you to notice. Number one, 28 positions. All right, 28 positions. Number two, 71% win rate. Average winner, $1,381. Average losers, about $1,600. So even on my losers, I'm not getting completely blown apart. And that's the way that this system works. You can see that these call spreads, these are bearish. The put spreads are bullish. So you can see that I've gone both directions this year because the market has been up or down. And you could ultimately reproduce this P&L for as little as a $50,000 account. I trade a little bit more because I like to have very, very, very low risk. So my returns are sometimes a little bit lower than what I always talk about. But you can trade a $50,000 account and get this exact same result, which is awesome. $14,000 through 6.5 months of the year with as little as a $50,000 account is awesome. Okay. Now, what I want to show you tonight is essentially what that does for you. Now, I mentioned earlier that my name was Ron Wheeler. I'm the manager of options trading here at VectorVest, and I've been trading now for 25 years. Been doing it pretty much all of my adult life. And when I first started in the industry, I didn't start as a trader. I just kind of came into the industry as a software and hardware guy that was an IT person. When I first got started trading, I had a rough go of it. And like a lot of investors, the reason why I had a rough go of it is because to become good at investing or trading, you have to really manage a couple things. Number one, you have to learn how to predict market behavior. Is it going to go up? Is it going to go down? What's it going to do? Then you have to worry about the money management side where, okay, my winning trades are making a $500 profit. My losing trades are losing $3,000. That's not going to work. So you got to manage all of these moving parts. So for like a lot of traders and investors, it's really difficult. Now, I had a head start on most people. I was working with some of the best traders in the country, and they were very willing to help me overcome those obstacles. A lot of people aren't like that. Now, one of the things that I did back in my early days was I traded futures. Now, the bad part about futures trading or stock trading in general is when you buy or sell something, you have to be right. So if I bought the futures or if I bought 100 shares of Tesla, it doesn't matter what you buy. The stock or the market's got to go up. If it doesn't go up, you will not win. And vice versa if you short something, okay? Well, that's a big hurdle. I talked about that with direction, right? About 7 or 8 years into my trading career where I've already started doing pretty well as a day trader and as a shorter term trader, one of our clients visited our office and he said, "Hey, Ron, I use all the analysis that you teach, but I do it with options. Have you ever traded options before?" And I said, "You know what? I have. I've done a couple options trades, didn't really have good success with them. So I just focused on what was making money." And he said, "You might want to rethink your idea on options." So he sat down with me and he actually was a hedge fund trader for a decent sized hedge fund out of the Midwest. And he showed me the secret of institutional trading, essentially, how they use options to really increase their chance of success and minimize and cut their losses. So after spending probably about an hour, hour and a half with him, I really opened myself up to more options trading because the way he showed me to trade was, number one, it was probability. I could make money even when I was wrong. Number two, these trades had fixed losses and fixed gains. That way, I didn't have to struggle with getting out of a winning position thinking it could go higher or go lower, struggling with where to get out as a stop because these trades had fixed losses. I knew exactly how much I was going to lose right up front. I knew exactly how much I was going to gain. Think of the stress that takes off you as a trader. You've got probability on your side because you can make money when you're wrong, and all of the money management is laid out to you right up front. That really transitioned me, and I got really more interested in options, and I've been doing for pretty much the last decade that type of options trading. It's what I'm going to share with you tonight. So I'm going to take you on a journey. So here's where we are going to go tonight, and I want you to kind of get an idea of where we're going to go and how this seminar is going to progress. First, we're going to talk about the key strategic shift to generating income safely from the market. Then we're going to talk about how to win even if you're wrong. You're going to see the real problem that's been holding you back from winning a lot more than you lose. Then we're going to talk about how to trade with little risk. You're going to learn how to avoid the big mistake that most people make and what you need to do to place low risk trades. In fact, this risk is going to be lower than simply trading stocks. Then I'm going to put it into a system, a 15-minute daily system that you can use that's bulletproof. This is how myself and my clients trade to get a minimum of 3% per month, and we're doing it in as little as 15 minutes a day. Then, if you like what you see, I'm going to show you how to work with me and our team here at VectorVest further, and I'll tell you how you can do it. And then finally, we'll do a live Q&A. So if that sounds good, now's a great time to turn off all your distractions and stay focused. Try not to multitask. I don't want you to miss an important detail. And then also, I want you to stay with me to the end because I have a checklist I can give you that'll get you started planning your next trades. It's a PDF we'll put right in the handout section. Just do me a favor and remind me as we get to the end because I'll always forget to do it. Now, why is tonight's topic so important? Well, without an income system, it's on you, and that creates a number of problems for us. If we aren't retired, it keeps us stuck in a situation where we have to work in order to live. Whether you got a lot of money or no money at all, concerns about finance are one of the leading causes of stress. Worrying about whether you're going to have enough or if you're going to run out, that has a huge impact on your life and your health and even your relationships. Now, if you're already retired, you might be watching your savings get depleted faster than you can fill it, especially nowadays with prices going up so much. If things don't improve, you may fear you'll have to give up on investing and really just go back to work. Or worst case, you're going to run out of money during your retirement. Now, with a system that helps you generate income, things are a lot different. Now, I think this is one of the most important points of the webinar. So please pay close attention and write down what I'm about to say. In order to be financially free, our main need is income. And this is why most of us spend the majority of our lives working for a paycheck. In order to become financially free, you need to learn to generate income from your investments. And once that exceeds your expenses and lifestyle needs, you are financially free. So let me say that again. In order to become financially free, you need to learn to generate enough income from your investments that will cover your expenses and lifestyle needs. Now, whether you're still working or retired, that ability to generate income from your investments is really one of the most empowering skill sets you can have. Because when you have the ability to generate income from your investments, your life will change. If you're still working, you can increase your earning capacity. It's like having a second job. If you're retired, you can have a consistent source of income as if you quit your job, but they kept paying you. It's like a tap you can turn on whenever you want. This allows you to do things you want to do now and when you retire. So when you've got a system to help you generate income, it helps you retire sooner. And as I said, I believe this is one of the most important points of the presentation. So I'm just going to say it one more time. When the income from our investments exceeds our living expenses, we become financially free. We now have the ability to retire. And you'd be surprised in how little you need to get started. Brian's a client of ours, and he's a great example of this. He wanted to become proficient at drawing an income from the market. He had some health problems and he needed a way to supplement his income. He opened a trading account with $6,000 and he said he generated $23,000 in profit from that $6,000. In 10 months, he had 100% winning trades, 31 of 31. Now, the key point here is this. What he's experienced is not beginner's luck. It was the result of following a good system. It's the system that helped Brian get 100% winning trades and create that $23,000 in profit. And again, he started with $6,000. Now, the first thing you need to know to take control of your returns and get to that type of level is kind of a strategic mindset shift. You're either going to continue to be the gambler where you lose more than you win, or you're going to become an option seller and win more than you lose. Because being an option seller is the way that you can make that consistent income. It allows you to win even if you're wrong. Now, why do you want to be the casino or the house? Well, the house always wins. And number two, they always win because they control and stack probability. If you create something where the casino loses the edge, they ban it or they create rules around it. They are controlling and stacking probability. This is why they ultimately come out ahead all the time. And that's what our options paycheck system is built around, stacking the odds massively in your favor. So make a note of this. If you want to control your returns and results, you need to know how to stack probability in your favor. Now, the obvious question is, how do you do it? Well, the first step again is to shift from being the buyer of options to being the seller. So let me explain. Bruce is a great example of shifting from gambling on stocks to being the casino and controlling and stacking that probability. He said prior to working with us, he had mainly taken stock tips from his brokers. He focused on our SPX income system, which is our most basic trading system, as he's not the most technical person in the world, he says. But in the time he's been working with us, he's grown his trading account from 100 to $497,000 in 3.5 years. He's achieving a 74% win percentage simply by following the rules of the options paycheck system, and the whole system takes him around 15 minutes a day. So let me show you how this works. Here's an example of a typical stock you've been taught to make, or a typical stock trade, I should say. You find something you like, you think it'll go up. So you either buy shares of it or maybe you buy an option call. Why do you buy a call? Well, it's the most basic trade that you can make as an options trader. If you think a stock will go up, you buy a call. If you think a stock will go down, you buy a put. It's the most basic options trade there is. You do it because, again, it's basic. But what ends up happening a lot of times? Well, the stock doesn't go up, or maybe it doesn't go up enough, and that call you bought ends up expiring worthless. Has that ever happened to you? Well, you remember I said that I had traded options a couple of times before. I had really bad success with it. This is one of the reasons why. Well, what's causing you to lose? Well, a lot of people feel that maybe they just picked the wrong stock, or maybe it was the wrong strike price of the option, or maybe it was the wrong option expiration. But let's talk about the real problem. If you've been losing money or had more losers than winners with other systems, it's not your fault. It's because most of the systems on the planet teach you to be on the wrong side of the trade. You're taught to buy an option. But as a buyer, the probabilities are not on your side. And for most people, they end up buying and losing and buying and losing and buying and losing. Our paycheck system teaches you a new way of thinking. You need to be a seller and not a buyer, because this is how you get ahead of everyone else. This is how we can put probability on our side. It's how we win even if we're wrong. So let's take a closer look at how selling options works. As a buyer first, a typical trade is going to give you a 50-50 chance to be a winner. Why? Because when you buy, the only way you make money is if the stock moves in your direction. So instead of having a buyer's mentality, we're going to have a seller's mentality. Instead of hoping a stock goes up, as a seller, you're going to pick a price strategically using probability, because probability will tell you where the stock is not likely to go. So instead of needing the stock to go in your direction, you can pick a price which basically says, as long as the stock doesn't go down to here, I can make money. So take a look at what you're seeing on your screen right now. Okay, stock's at 203. I've chosen a price of 195. As long as the stock stays above 195, I make money. Okay, what does that do for you as a trader? You pick that price down there, and as long as the stock stays above it, you can make money. If the stock goes up, you make money. If the stock goes sideways, you make money. The stock can even come down a little, and you can still make money. So right from the very beginning, probability is in your favor. In some cases, we can even extend that probability. We simply choose a lower price, which gives you a bigger area where you can be right. In this case, I've gone down a little bit farther to 190. Now, what's happening here is, as long as the stock stays above $190 a share, it's trading at 203, I can be profitable. The only way you can put probability on your side like this is being an option seller. As a seller, you're putting that probability of success in your favor. And this is the definition of an income trade. Look at this again. You have a 70% likelihood of making money. Okay? That is an income trade. Not because you found some hot new indicator. It's because you are setting the trade up with probability built in. If the stock doesn't go up like you think it's going to, you've got a huge buffer where you can be wrong and still be right. Okay? An income trade like this, again, it's one where you can make money even if you're wrong on direction. Now, I want to introduce you to another client, Mike. He said he dabbled with options but lost on each trade. Have you ever been there? Eventually, he gave up on it and went back to try to learn more. He said the problem was he didn't have any set criteria for trading options. He wasn't comfortable, he knew what he was doing. So we worked together, Mike and I taught him the options paycheck system of being an options seller. He said immediately he became like an income machine. After he learned the system, he went out and said he had 17 out of 19 winning trades with a profit of over 12 grand in 4 months. The key point here is this: he went from buyer or gambler to seller or the house. He turned his situation around immediately. And he was even so happy he sent me a copy of his trades. Take a look. Notice the number of profits versus the number of losses. Perfect. And then look at the days to close. He's averaging about $1,000 every 7 to 10 days. That's how it usually works. Okay? That's how this usually works. The trades that we take typically last about 7 to 10 days. We're not day trading or anything like that. He's averaging over 85% winners. And in fact, our most basic strategy, which trades just the S&P, has over 80% winners over the last decade. You're placing trades that have a high probability of winning. Again, you are now going to be the casino where the odds are stacked in your favor on every trade. Now, one thing you have to understand, we're not looking for home runs here. We don't do that. Baseball analogy, right? Home runs look good, but singles are what win the games. I always like to use the example of Moneyball. I don't know if you ever saw that movie. It's about the Oakland Athletics. And what they did is they started doing analytics on baseball, and they found that they could use cheaper players that just get on base more. Because the more people they got on base, the more runs they scored, and the higher likelihood they had that they were going to win. So they focused the team in that direction. They didn't need the big home run hitters. They needed those cheap guys that could get on base. And that's what income trading is all about. I'm not going to baffle you with, look at this trade where I made 1,400%. I'm going to baffle you with, hey, look at these trades where I was 70% right and averaged 3% a month. I'm not looking for home runs. I'm looking for consistency. That's the idea behind income trading. It's a little bit different than what you might expect. Now, you've seen by simply flipping from buyer to seller, you stack odds in your favor. Brian did it, Mike did it, Bruce did it. Now, what we're going to do is stack the odds even further by understanding and capitalizing on the three most common buyers or gamblers' mistakes. So, the first mistake that a lot of options buyers make is they choose unrealistic strikes. They choose strike prices that are so far away the stock has no chance of hitting it. So, let me give you an option 101 example here. You got a stock, you think it's going to go up, it's $217 a share. So, what a lot of option buyers do is they'll go way above the current price of the stock and they'll buy a call. All right. Now, why do they buy a call there? Because it's really, really inexpensive. Even though they know they're not going to make any serious money on that trade unless the stock goes up $15 a share. They do it anyway because they're treating options like lottery tickets, and most of the time they end up losing. Okay? What we're going to do is we're going to find those option strike prices that have a very small chance of the stock hitting them. We sell it to them because by selling it to them, we now put probability on our side. By selling them those options, we have a high probability of winning. Okay? Now, the same goes for puts. There's people who buy puts way down here, either as lottery tickets or cheap insurance. Maybe they have stock and they just want to protect it. It doesn't matter why they're doing it. Since there's always buyers out there who buy these way far, what they're called out of the money options, we're going to be the one who sells it to them. Because by doing that, that puts probability in our corner. We have that 60 to 90% probability of making money. Okay? Now, the second mistake that buyers make is they choose option expirations that are simply too close. It's like when you go to the grocery store and see steak on sale for 50% off. There's a reason why it's 50% off. It's going to expire very soon. If you plan on taking that home and putting it in your fridge for a couple weeks, you're going to just throw that money away. Options are the same thing. If you look at options expiration and you look at option premium prices, what you're going to notice is the longer expiration you have, this is 180 days, it's going to be more expensive. As you start getting closer and closer and closer to expiration, the options start getting cheaper and cheaper and cheaper. And what happens is after about 135 days, which is right about here where my arrow's at, option price declines become exponential. It starts losing value very, very rapidly. Now, a mistake that buyers make is they target this area in the final 45 days to buy a lot of their options. And the problem is that decay is killing any potential profit they have. As a seller, though, that decay goes into my pocket. If I sell something for $1 and it's rapidly losing its value, that's good for me. So what we're going to do is focusing on selling options in that window, that final 45 days. Now, here's kind of how this works. All right. You got an example here, Home Depot. Maybe you're bullish on Home Depot right here and you think the stock's going to go up. So people go out, they buy an option that expires in a couple weeks. Maybe they buy it in a month, month and a half. It doesn't matter. What happens is the decay of your option premium is happening exponentially. As an option buyer, that puts you at a significant disadvantage. But as an option seller, that works in my favor. It's how I make money faster with my trades. Again, there's going to be always people buying these options that are too close to expiration. Hey, let them do it. We are going to be the seller because we are going to win the majority of the time. Now, the third mistake that a lot of option buyers make is they simply pay too much. And this is something that a lot of options traders don't understand. I have an example. I want you to look at the top of the screen. You've got two stocks. They are essentially the same price, 76.24 and 76.37. But even though they have the same stock price, they have vastly different options prices. Over on the left, that option is trading for $900. Over on the right, $180. Why? The one on the left has extremely high volatility. Buyers who buy these options are paying too much. And what's the big deal, right? I mean, who cares? It's just money. I have a huge account. I can handle it, right? It's not about that. It's about when you overpay for options, it makes making money even harder. All right. So I want to show you something here. Let's pretend that both stocks go up $8 a share. Okay. You've bought 100 shares of each stock, you made $800 each. But what happens when you buy these overpriced options is your options trade is going to lose money. Both of these stocks went up $8 a share. The one on the left is a losing trade. The one on the right had a 300% return. Okay? Why? Because the buyer didn't pay attention to volatility. They paid too much. Now, if you remember earlier, I said in some cases we can even increase probability more. When you start seeking out these very expensive options, we can increase our probability by a lot. Okay? Now, another client of ours, Bob, he's got one of the most interesting stories I've seen. He said prior to working with us, he was making a bunch of the mistakes that we talk about, and it cost him dearly. He said he ended up either broke or bankrupt 3 times, and he said he came close to living under a bridge. The options paycheck helped him turn his situation around in as little as 4 months. He learned to turn those liabilities into strategies that controlled and stacked probability in his favor. He said in the 4 months, he grew his account by 71% and achieved a 79% trade winning percentage. Remember, in order to control your returns and results, you need to be an option seller. You've got to stack probability in your favor. Now, let me ask you a question. Find that chat window. Do me a favor. Have any of you ever made those type of options buyers mistakes? Anybody out there made a mistake like that? I'll take a look in the chat window here. Normally I would get a drink while you guys are typing in, but I forgot to get a drink. Okay. Yep. Mark, you were first on the list. Yep. Now, a couple people are saying never traded options before. That's fine. If you've never traded options before, I can help you. Okay. That way you don't get into any of these buyers' mistakes. And yeah, I see the yeps coming in there. Yes. Yeah. Of course I have. So, yep. And then Scott, you said, and we'll talk about that too. Scott said he's done this selling before, but he's lost money. We're going to talk about that because one of the biggest reasons that a lot of option sellers lose money is because they're trading with too much risk. Now, this might be your instance, Scott, maybe not. But now that I hope you want to be an option seller, we got to talk about controlling risk, okay? When a lot of people hear the word options, and especially selling options, they think it's risky. But our paycheck system uses a low risk strategy for selling options. And this is why it's a core strategy that we teach our retirees. Now, reducing risk is important because of this. There's a lot of option sellers out there, and I've talked to many of them. They said, you know what, Ron? I was like Brian. I had 31 winning trades in a row. Then one bad trade came in and wiped out a bunch of my winners or all of my winners. That's obviously not good. Now, I always like to use my silly example of this, right? When it comes to mitigating risk, if I jump off the roof of my house, I'm probably going to break my legs. I have a pretty high roof, at a minimum. So if I think about that, all right, I might break my legs. All right, so how do I mitigate the risk? I can throw a mattress down, maybe a trampoline, maybe some boxes that'll help break my fall, or better yet, don't jump off the roof at all. If I don't jump off the roof, I don't have to mitigate any damage. I won't actually hurt myself. Now, in the option selling world, this is key. The reason we don't ever have situations like this where one bad trade wipes out a bunch of winners is because we would never take a trade where that could happen. Remember early on I showed you and I told you that all of the risk is known up front? Because all of the risk is known up front, we can avoid situations like this. Because if this happens, it's really hard to recover your losses, right? But in order to control those losses, you have to have a built-in protection plan. Because once you have that built-in protection plan and you're limiting your risk, this is how you can successfully grow your capital. Okay? Remember earlier I said the home runs look good? The home run trades typically require a lot of risk. That's not what we're after here. All right? Home runs look good, but getting on base, getting those singles is what's going to win us these games. Now, one of the most common questions I get is, can I do this from an IRA? And the answer is, well, in most cases, yes. John is a client of ours. He traded in his IRA and he grew it over 100% in 1 year using the paycheck system. He said he had tried and struggled with trading for some time before working with us. He learned to follow the system and turn his inconsistent results into predictable monthly income. In the 12 months, he said he had 85% winning trades and more than double the size of his IRA. And he said he spent no more than 15 minutes a day trading. That is awesome. Now, the options paycheck system, talk a little bit more about it now. We make sure that your risk is known up front before you even open the trade. How do we do it? Well, first, we choose stocks that are relatively low risk. We have a very specific criteria, but in general, if we're bullish, we start by focusing on good stocks that are already rising in price. If we're bearish, vice versa. Now, as option sellers, we do not sell options naked, okay? We do not sell an option naked. That just means you sell an option and you're done. Because traditional option selling systems leave you with all of this risk down here. It's not good. What we want to do as our paycheck system is shrink your risk down to this. So let me show you how this works. This again, it's a graph of a typical stock that we'd be bullish on. It's a beautiful graph, so it's understandable to be bullish on a stock that looks like this. Now, traditionally, people would go out there and just buy the stock here, or maybe they'll use that price to buy a call, right? We're not going to do that anymore. When we are bullish, we are going to choose a price underneath the stock, and we are going to sell a put. In a bullish market, we sell puts. In a bearish market, we sell calls, just so you know. When you sell a put, you receive a premium. So in this case, we're getting paid $200 for every contract we sell. If I sold 10 contracts, I would get paid $2,000. Now that sounds good, right? The problem is it leaves us with all this risk. Now, selling an option is not like when you sell a car, right? You sign the title over, the guy or girl takes the car, you're done. Your obligations are over, you don't have the car anymore, you go to the bank and put your money in the bank. It's not like that. Selling options is like an insurance company, all right? When I buy car insurance, I send my car insurance company a check for, I don't even know, to be completely honest with you. It's like auto pay. But let's say it's $2,000 a year, all right? When I send them that check for $2,000 a year, they cash the check and put it in their bank. But they don't just walk away. They don't just say, hey, Ron, thanks for the $2,000. During the policy period or before it expires, the expiration, they are obligated to protect me in case of a loss. If I don't have a loss, they keep the premium. Same thing with options. If I sell a put, I have an obligation to buy the stock for 135 if my option buyer wants me to. Okay? Now, I've been doing this for over a decade. I have never actually had to buy a stock based on this. All right, it's never happened to me. I've sold options for over a decade, thousands and thousands of options. I've never actually had to buy a stock from this. So don't worry about that. That is just the what could happen theoretically. All right. So think about it this way. Stock has a big earnings announcement. All of a sudden the stock opens up at $100 a share. Now you have this obligation to buy the stock at 135. Now you're sitting in a huge hole. Unacceptable. So what we're going to do is we are going to limit the risk on this trade. And the way that we do it is we are going to use some downside protection. We're going to limit our risk to this right here. And the way that we're going to do it is we're going to take some of the premium that we collected and we are going to buy an insurance put. We are simultaneously going to sell a put and buy a put. Now that insurance leg does cost me something. It costs me $100. Now that insurance prevents me in case of a disaster. If that happens and all of a sudden the stock goes to $100, when I bought that put, it gives me the right to sell the stock to somebody else for $130. I've limited my risk down to $5. Okay? So I still get paid a credit of $100 to get this trade off. If I traded on 10 contracts, I would get paid $1,000. And as closer and closer you get to expiration, the value of that contract starts to dry up. Now, the cool part about options is I can trade this option trade like anything else. I can go out and buy 100 shares of this stock and then sell it in the afternoon. I can enter this trade in the morning and get rid of it 3 days later and put it on somebody else. That's the beauty. They trade back and forth. All right. Now, what this trade has done for us is this. If the stock goes up like we thought it was going to, we are going to make money. The option values start to decline exponentially, and we are able to profit from that. If the stock goes sideways, that option decay will also give us profits, and we'll still make money. And as long as the stock stays above 135, we still have an area to make money. And if the stock were to go lower than 135, no problem. We would exit the trade and take a small proportional loss. It's one of the things about options you got to understand. We're not going to stay in this trade forever. We're going to, just like buying a stock, right? I'm buying a stock at $100 a share. Hopefully it goes up to 110. Maybe I take profits. Same thing with an options trade. We're going to get into the trade, get paid $1,000. We're going to exit the trade and maybe pay a little bit out of our pocket to keep the difference. Want to know how that works? Let's actually do a couple. I'm going to show you some trades that I made in the past with my clients and show you how this works. So this is an example of Goldman Sachs. At the time, Goldman Sachs was popping above its previous high, which I really, really like when that happens. And it was trading at about $310 a share. So pretty decent, pretty decent. Now, you are going to be an option seller. All right. What I want you to do in the chat window. Now, I'm not asking you for the perfect number here, but I want you to type in the chat window. Okay, Ron, I kind of get the idea. I think that Goldman Sachs, and I always use the wrong color right off the bat. I think that Goldman Sachs is going to go up. But what I want to do is pick a price where I can still make money even if Goldman Sachs goes sideways or down somewhere. Now, before I ask you where you would pick a price at, I want to explain something because this is very important. It's about risk and probability. All right? You have to balance those two things, risk and probability. Because here's the thing. I can sell an option that may have a 95% chance of me winning the trade. Probability is awesome. I can give you a 95% probability option trade. Now, everybody wants that, I know, but there's risk to that. The risk is on my winning trades, maybe I only make $10. On my 5% losing trades, I might lose $2,000. Okay, so that 95% win rate looks really, really good until you have that loser that comes in and wipes out everything. So as an option seller, what we have to do is we have to keep that probability and that risk balanced. All right. Now, what I'm looking for is I'm looking for probabilities of winning greater than 60%. Okay. And then from a risk perspective, I'm looking at no more than about a 1 to 1.6 ratio. Now, that's pretty big, by the way. So that means I want to make 1,000 on my winners and lose no more than 1,600 on my losers, for instance. Or if you're trading a smaller account, 100, 160, something like that. Now, to do that, I can't just go all the way down here and say, okay, Ron, I think it's going to stay above 250 and I can make money here, here, or even down here. Okay? You have to balance it. All right. Now, what I want you guys to do, just take a shot at this. You think the stock is going to go up. I want you to get into the seller's mentality. Pick me a price under 310 where you think that that balance I just talked about exists. Where do you think that that balance exists? This is not a pass or fail. This is just to see if you're kind of getting into the concept of what we're talking about so far. All right. Mark, 270, 295, 300. Michael, Norman's at 300. I see another 270, 295. I'm sorry, I can't read all the names. Glenn's at 300. I see 275, 280. But okay, so you guys are like really all, and ladies, you're all over the map. That's okay, by the way. That's not a bad thing. I've seen answers pretty much from here really up to about here. And listen, it's okay. None of you gave me a wrong answer, okay? You're getting into the idea of, all right, I just need to pick a price under the stock where I'm comfortable. Now, where this one happened to be in real life was actually at $300 a share. So that $300 a share price, what this trade ultimately was, let me explain it to you. In one transaction, I sold 5 $300 puts and I simultaneously bought 5 $290 puts. When I took that trade, I got paid $157 per contract. Since I did 5, I collected $785. Now, the net result of what I want to look for here, I want the stock to go up because you now have a contract that you're hoping declines. All right. So this is what it looks like in a broker account. This happens to be Thinkorswim. I use Thinkorswim. I use Schwab. I use a couple different brokers for things. This is right here. On February 16th at 12:35, I entered the trade. I sold 5 contracts to open the $300 put, and I sold it for $7.07. I simultaneously bought 5 puts for $295, and I paid $5.50. My broker paid me $1.57, $157 times 5 contracts. Now, the stock over the next 8 days went up about 4.5%. But you can see here on February 24th at 9:32 in the morning, I exited my trade at 79 cents. My goal is to make about 50% of what I sell something for. So if I sell something for $200, my goal is to collect and make $100. How do I do that? Well, eventually I need to exit the trade. What happens in this transaction is this. On February 16th, I collected $157 a contract. On February 24, I closed the position and I paid out of my pocket $79. Well, if I collected $157 and then paid $79 of that back, I get to keep the remaining balance. That's how I make money. Okay? Now, here's another example, Tesla. Tesla had a nice uptrend. It broke above resistance. So let's zoom in a little bit closer. I trade Tesla every now and then. Tesla's a pretty crazy stock, but every now and then it settles into some very, very calm waters. Now, let me ask you this. Get into that seller's mentality. Find that balance. And again, don't think, Ron, you haven't given me enough information to pick the price perfectly because you're absolutely right. I just want you to get into the seller's mentality and say, okay, Ron, I understand. The stock's at 525. It's going up. I need to pick a price below it to give myself room to make money even if I'm wrong. So what do you guys think? Where's that balance of probability and risk and reward? All right. Michael, you were first this time at 450. Norman, you were at 475. Now they're really starting to fly in. Okay, Norman, you were a trendsetter. 475, Glenn, 470, Mark. There's about 6 475s that flew past my screen as well. So I won't be able to call out those names. But yeah, so you guys are anywhere from about 470 this time, all the way up to about 500. And again, I want you to understand, for what we've talked about so far, none of those answers are wrong. None of those answers are wrong. You're getting into the mindset of a seller. All right, I think the stock's going to go up. Pick a price down here. Now I can make money if we go sideways or even down. Now, I did this trade at 485. Okay, so basically what that means is as long as the stock stays above 485, I can still make money. Okay, I can still make money. Now, in this particular trade, I did 8 contracts at $1,560 and I received $195 per contract. In 2 days, the stock shot up about 7%. You can see right here at 11:23 at 2:44 in the afternoon, I entered and got $1.95. And 2 days later, around 11:17 in the morning, I exited the trade by paying the broker 85 cents. I got to keep $1.10. That's how these trades work. Okay? That's the idea behind doing trades like this. This is what we want to see. All right? Now, one of our other clients is Jim. Prior to working with me, he said his results were very inconsistent and he felt very unsatisfied. He kept thinking that, there had to be something else out there that was better. Have you ever felt that way, like there's something more out there? Jim said he wanted a way to supplement what he was doing and provide more of a regular income and that had a high probability of success. Well, he learned the system. He went out and he said he had 21 winners in a row. And he said he had 76% return in 8 months. And his average trade was 8 days. Now, I want you to think about this. What would an income system like this allow you to do? If you were to able to implement this and you were able to make 3% per month, and I know someone asked earlier, what do you mean by 3%? Well, if you open up a $50,000 trading account, right, that means you're making $1,500 a month. If you open up a $100,000 trading account, that means you're making, $3,000 a month. All right, that's what that means. So I'm going to take a drink real quick. I want you guys to, ask yourself, what would that allow you to do? Now, a lot of you are retired, so I'm seeing these answers. I get it. More travel, help my kids, pay off my kids' student loans. I love that one. Retire earlier, work less. Okay? This is the thing that can happen if you are implementing a proper income approach. Okay? It's doable. It's possible. You're seeing how this works. Now, in order to accomplish this, you got to have that strategic shift. You've got to learn to become the seller. This is how we stack probability on our side. Now, what I want to show you next is how we put this into a bulletproof system that you can do in as little as 15 minutes a day. And this is important because one of the biggest questions I get is around how long is this going to take me to implement? I'm retired. I don't want to spend another job doing this. And it's a good question because there's so much information out there that you might not be able to find trades easily, right? You're going to sort through all of that data, and that can take a lot of time if you don't know what you're looking for. You're going to be trading blindly, bumping into wall after wall, not knowing where to go, being stressed, disheartened. You need a good system. And with the right system, you can identify good stocks, get reliable income in as little as 15 minutes a day. But to do that, you need a good system, not just any system. It's got to be a straight line system, a simple way to know when to place your trades, how to find them, how to set them up, and how to manage them. So let me walk you through the pieces of the options paycheck system and the order they go in. No one else teaches option selling this way. This is like the secret sauce, if you will. There are 6 pieces and the top 5 build on each other, and then the 6th kind of wraps it all up with a bow, if you know what I mean. So we start with market direction. A lot of traders ignore this, and they just go out and start placing trades. You're going to be placing trades that are either bullish or bearish, so you have to know how to look at market direction. Okay? You're only going to be placing bullish or bearish trades at a time. We're not going to be all over the map. Why? Because history has shown that the majority of stocks follow the market direction. So we also are going to follow market direction because it stacks probability even more. Now, we have a built-in timing signal that we use that helps tell us the market direction. All right? Now, once we know the market direction, we're going to look for individual stocks. Now, just trading stocks that you might know or hear about on TV, that's not the best choice. You want to find good stocks that are rising in price when the market's in an uptrend and bad stocks that are moving down in price when the market's falling. Now, we use 2 things. We use fundamentals and we use price trend. So graphs and underlying fundamentals for our selections. Okay. We have pre-built searches in our VectorVest application that'll find these things for you in a matter of seconds. Now, once we find the stock, it's time to look at the options part of this. Now, do you remember earlier I told you about volatility, how important that was? I need to find options that are very high volatility. That way the premiums are really high and I can get a lot of money for them. Then, remember how I told you that, oh my gosh, all of a sudden an earnings trade comes or an earnings event comes around? We make sure that we don't have any earnings coming because that can really affect the direction of the trade. And then expiration. We want to make sure that we're in that time decay window. Now, there's a lot of tools out there from brokers that can help with this. We use a proprietary search tool which finds these things in seconds. Now we get the trade set up. This is where we want to pick the one that has the highest probability of success. How do we know probability? It's based on the strike prices. Each strike price has a different probability. But more importantly, we also have to look at the risk reward. We cannot set up a trade where one bad trade wipes out 15 winners. That is a big no-no. So we have to balance probability and risk reward. Then the next step we get into is trade management. You've already got your trade all ready to go. The next thing we need to do is come up with our plan. You need to have a plan in place to take profits. You need to have a plan in place if you want to repair a trade if it goes against you to reduce your losses. And then you need to have a trade plan to exit with a loss. We don't want you to be sitting there frozen like a deer in the headlights because you don't know what to do. Okay? If a trade goes against us, we know exactly what to do. You will never be in a situation of panic. And then I told you the last one kind of ties them all together. They want something to do this quickly. You don't want to be spending all day on this. You need a tool that allows you to do these things. And it should be something you're comfortable. Now, some brokers have great tools out there that are better than others. I love Thinkorswim. They got a lot of great stuff. Schwab has good stuff. E-Trade has good stuff. IB has good stuff. We happen to use a tool called VectorVest Options Pro, and it's built specifically for this. So it makes it a little bit faster. Now, speaking of that, Hugh, one of our clients, he was in the same boat. He said, you know, Ron, I want something that's efficient and works because his work-life balance was off. He was doing too much work on investing and not enough time being fun, having free time. Are you like that too? Too much time doing the things you don't want to do and then not enough time doing the things you want? Now that Hugh learned the paycheck system of selling options, he is able to go out there, have more fun, and just be happier. In his first 43 trades, he had 38 winners and returned over $26,000 in profits in only 4 months. Now, here's what I want you to do. I want you to take a pen. Don't write on your screens, by the way. Take a pen. I want you to look at the steps of the option system. Market direction, stock finder, option selection. I want you to give yourself a little grade. If there's an area where you're not quite good at yet, put a little frowny face there. If there's an area where you're pretty adept at, maybe you're good at market direction and stock finder, put a little check mark there. Give yourself about 15, 20 seconds and grade yourself to how good you are or what areas are good and what areas need repair. And I guess you could say what areas need some work. Now, I bet maybe willing 1 in 100 investors will ever know how to do this right. So let me ask you a question. I want you to type in the chat, what areas do you personally need to work on? What areas do you need to work on? All right, I see the first one in there was all of them. There's nothing wrong with that. You came hopefully to the class today to get an idea of what you needed to do to create income. And I see a lot of all of them, all of them. Ron never traded options before, need work with options and below. Money management, money managements. I see a couple of money managements. I see market selection, stock selection, not very good at picking the right stocks. All of them, all of them. Option selection, and I kind of can reach the end there. Scott, you mentioned the rest. The reality is all of them and then option selection. And I'm kind of at the bottom of the list here. Stock finding, Norman, right setup, greed. Yeah, you know, one of the nice things about this kind of system is the greed kind of gets put on hold because they do have a maximum profit, which is nice. All right, now listen. The bottom line here is this: if you want to get good at this, you need to have check marks all the way down. You need to be good at all of these things. Now, I don't know the exact reason that you came here to today's webinar, but I'm going to make a few guesses. All right. Number one, maybe you've been trading blindly. You don't really know what to do and you're being very inconsistent. You're bumping into one wall after the next, and that's just leaving you inconsistencies. Kind of like Jim did before he put the paycheck system to work. Maybe you're having many small losses and it's just killing your portfolio. It's depleting your savings. The money coming in is not exceeding the money going out. Maybe you're just not where you want to be. Now, today, I showed you the secret to fixing that. And again, it's something that maybe one in only 100 investors will ever know. And now you're one of them. You saw by being an option seller, you can win even if you're wrong. By using insurance properly, you can do it with very little risk, even less risk than buying and selling stocks. You saw how we put this into a bulletproof system that you can do in as little as 15 minutes a day. And in fact, if you want to keep it basic, it's 15 minutes a week. Okay? You saw over and over the secret to generating that income is that shift from being the option buyer, or what I like to call gambler, to being the casino. To do this right, we've got to make that option selling shift. Listen, there's going to be all kinds of people out there buying options and doing it wrong. We can't stop them. All right? There's always going to be them out there. But as long as they're out there, we're going to be the casino because the house always wins in the end. This is what the paycheck system teaches you. Just like Brian, just like Bruce, just like Bob and Jim, and finally Hugh. Oh, not finally Hugh. I forgot about John. John did it in his IRA, so that's a very important detail, by the way. It's always a question about IRAs, and yes, you can do this in most IRAs. Now, where we're at now is, how do I implement the paycheck system in my portfolio? Well, you have a choice. Option number one is do nothing. Okay, stay where you are right now. If you don't need income and you're fine, then don't worry about it. You're in good shape. I'm happy, right? But if you want to make extra income any month, that leaves you with two other options. You can try to do it alone, kind of like, Mike did earlier. Didn't have much success. Do some trial and error, do some work, read some books, hit the internet. You might be able to pull it off. But the third choice is just easier. Let us show you how to do it. I'll walk you through each piece of the options paycheck system. In just a few weeks, you'll have that system in place that doesn't take a lot of time. So ask yourself, out of those three, what's going to be easier for you? Now, there's two types of people. Person number one is someone who dreams about their financial goals but never takes action or does anything to make it happen. The second person is someone who's serious about their goals. They're ready to take action when they see a good opportunity. Now, since you're dedicated enough to be with me to this point, I'm willing to bet you're person number two, and that's going to make you the perfect candidate for the options paycheck. So let me tell you what we got put together for you. First and foremost is our all-new options paycheck experience. We redesigned this in 2022. I originally did the class in 2016, taking 4.5, 5 years of feedback from our clients. We set out to reinvent the course this year, and we did it. Now, our clients who are taking this course and have done this course can average 3% per month. Some guys who you saw today are a little more active, they're higher. The options paycheck experience is the only implementation program of its kind. It teaches you from A to Z how to find, set up, and manage your trades to generate income, and how to do it safer and consistent in any market condition. You will never have the fear of running out of money. Now, after going through the experience, you're going to know exactly how calls and puts work, along with all the terms you need to know about options, and even the ones you don't need to know. You will not have to worry about knowing options. You're going to have clear signals telling you when you need to trade and when not to trade. You're going to be able to identify the stocks very quickly that are your best candidates. Okay? We're going to set up income trades that give you historically a better than 70% success rate. And even if you can't get 70%, you're still going to be all right. You're going to have a trade management game plan in place prior to placing your trade so you know how to handle any situation the market throws at you. You're going to be able to confidently enter and exit trades with your broker like a pro, whether it's your first trade or 500th trade. And you're going to implement a system that's going to help you generate safe and consistent income. That's going to let you live that lifestyle you want without that fear of running out of money. Now, the course is 8 modules, and we make them so each module builds on the one prior. As you go through the modules, you're getting closer and closer to that end goal, which is a system for consistent income. Now, the first 2 modules are what we call the option income foundation. A lot of people try to build a successful income portfolio, but they base it on a portfolio that has a weak foundation of knowledge. Now, we understand. We know what it's like to learn options for the first time because we've been there. That's why it pays to learn from a team who's gone through it before. Now, the outcome from Module 1 is, again, you're going to know exactly how calls and puts work so you can use them properly in your trades. You're going to know which option terms are important, which things you can ignore. That way you're not wasting your time or getting frustrated. Now, in Module 2, you're going to learn what a spread is and how it works. You're going to be filled with confidence to start building an income system around these powerful trades. Now that you've constructed that foundation of options knowledge in the trades, it's time to lay out the step-by-step system to placing those trades to generate paychecks. Each step along the way stacks probability in your favor and it reduces risk. And it all starts with knowing when to trade. You're going to get complete clarity on market trends. So instead of looking at all possible trades, you're going to narrow your focus. You're going to know whether to be bullish or bearish and even when not to trade. Now that you know the direction of the market, we're going to find stocks that are highly likely to move in the same direction. This is going to stack probability even more in your favor. So the outcome here is you're going to know how to quickly find the best stocks and indexes to trade that are going to give you the highest probability. Now that you've got your list of stocks, it's time to narrow it down to the best option candidate. By using the rules in this module, you're going to make sure that you're getting paid top dollar for your trade and making it so you can make money even if the stock goes nowhere. You continue to stack probability and reduce risk in Module 6 by the way you set up your trade. Here you're going to make sure your trade has the perfect combination of risk and reward, and you'll know exactly where to set your strikes. Great trades don't happen by accident. They happen because of careful planning and strategically setting them up correctly right from the start. Now, you've got your high probability trade picked out and you're ready to go. In Module 7, you're going to learn how to have your plan in place so that you know when to exit the trades, not only to take profits, but to minimize losses. You're never going to be frozen like a deer in the headlights ever again. No matter what the market throws at you, you're going to know how to react. This allows you to trade stress-free. And then now that you got the best stock, the best trade, low risk, high probability, you're mapped out your management game plan, it's time to place the trade. So this module is going to break down the trade execution phase into simple, repeatable steps. Now, as a new trader, as a new income trader, I know that it can be overwhelming. So we include a checklist for you, one that you can go right down the list to make sure you're following the directions and the setup properly on every trade that you take. Now, before I talk about price, I want to make the trade even more low risk. We offer a 100% money back guarantee in our class. Okay, you can go through the entire course. If you're not satisfied, we taught you how to profit using options and you can get your money back. The only thing that we tell you is you have to do the work. That means you have to watch the videos. Okay, you have to actually do the course to be eligible for the refund. The reason why I put that caveat in there is because I want to attract serious people who are ready to jump in and do the work. If you do the work and you find it's not for you, then you have your out. You have a money back guarantee. Okay, and again, what we're doing here is 3% per month, 36% per year, not taking a lot of time to get this done. Now, I got a client back from one of our clients, Joe. He said, Ron, I'm writing a thank you for the Teaching the Options Paycheck course. I took your class last fall and wanted you to know my results for the past 10 months. I keep a journal to document every trade, and so far I've profited on 239 trades out of the 350 that I've taken, a 68% winning rate. I've profited over $100,000 in this time. What's more exciting is that since my knowledge and experience have grown in regards to taking really good risk reward, I've profited over $50,000 in the last 6 weeks. My success rate has been 78% over his last 100 trades, and he only takes trades with a 2-to-1 or better risk reward. I want to thank you for teaching this simple but very effective system. Now listen, if I'd have told Joe that fall that I'll give him $100,000 if he gave me $2,000, you think he would take that trade? Would you? I'm going to make a better offer that you're going to see here in a second. Now, before I tell you any more about it, okay, I want to point something out. This is not a get-rich-quick scheme. It's not something where you're going to expect to become a millionaire in the next 24 hours. You're not going to triple your account in 3 weeks, okay? It's serious and requires some effort on your part. So, if you can't commit to it now, then don't do it. It's not right for you. It's for serious people who take investing seriously and are willing to put in the time to learn the system. So if you're serious about this, ready to do the work and get the results, then you are the perfect candidate to get started on your options paycheck experience. It is step-by-step training to go from basics to a full, complete income generating system. Just these modules alone are worth the price of the course. But I got a couple bonuses for you as well. Our first bonus is what we call the Mastery Package. Now, the Mastery Package includes module by module mastery sessions. When you purchase the course, we're going to activate all 8 modules for you. What we want you to do is focus on 2 modules a week, do the homework, and take the quizzes. Then, during the week, my team and I will have 2 mastery sessions classes, one dedicated to each module. That's going to help you master the course material. Then at the end of the week, we're going to have an additional Q&A. That means I'll have 3 live sessions each week. It's going to give you plenty of opportunities to ask questions and get help. You don't have to come to those classes if you don't want to. You can come to 1 or 2 or 3, as many as you want. It doesn't matter. Okay. We just want to make sure they're out there for you so you have an opportunity, hopefully, to get to one based on your schedule. Now, we also have an online support community plus a private dedicated email address with me and my team. If you don't have it, we're going to give you access to both VectorVest and the Options Pro software so you can test drive them to help you implement. You don't need them, but they are tools for speed and efficiency. With that mastery package, you're going to have the tools and support you need to master these techniques. So you're ready to place your income trade as soon as you can. Speaking of that, our second bonus is we're going to give you what we call an implementation month. You're going to get access to our live trading sessions. During these sessions, you're going to watch me find, select, set up, and find these trades in real time. I'll show you how to manage my existing trades each week, and this is a huge bonus. You're going to see the paycheck system in action, and you can follow along in your own account if you want to. I'm also going to hold live office hours twice a week. So if you need help placing a trade, managing, or even understanding a concept, I'm going to be there for you. If you can't make a session, don't worry. Submit your questions in advance. Watch the recording. We've got you covered. Now, the last thing I want to talk about is our SPX paycheck system. This is where I take the entire course and boil it down into like one trade where you can do it as little as 15 minutes a week. With one symbol, one rule, one stop rule, done. Okay? It's simple and easy to do. My teammate Brian taught it to his 14-year-old daughter at the time, and she could do it. It's a very simple strategy. Plus, you're going to get live trading sessions where I actually do these trades. Just like you saw here, Kathy, profited 440 out of 215, another profitable week. Cheryl, my SPX bear call credit claim, 50% profit. Yeah, woohoo, I think I'm getting this stuff. Alan, who actually took 4 trades in the matter of 3 days, said he made 5,500 and the week's not over. So quick summary of everything. You can get the complete options paycheck training, 8 training modules, videos, checklists, everything you need. You're going to get the bonus mastery package, the implementation month, and the SPX paycheck system. The total value of that is $54.75. But what I want to do, here's the opportunity in front of you. I'm going to roll up my sleeves and work with a couple hundred people who are serious about generating income. So if you choose to be one of them, together we are going to create an income system in your portfolio, even if you've never had success with options. So if you want to join me and have me take you by the hand and help you install an option income system in your portfolio, then you can do this for $12.95. Okay? Bear with me one second. Now, you can go to optionspaycheck.com and get yourself registered up for that. Now, what I also want to do special just for you guys, since you've came to the class, there's a couple things we can do. Number one, we have a payment plan. If you want to do $495 up front and then 2 charges of $495 in the next 2 months, that's cool. But if you're a pay it now kind of person, if you sign up before the end of our session tonight, I'll knock a couple $100 off of it and you can do it for $9.95. Okay? Once we finish our session tonight, that price is going to go back up to $12.95, and you have to register before tomorrow at 10 a.m. Registration closes. The live curriculum starts tomorrow. Okay? This $9.95 price, by the way, is only good, and I'll show you real quick here, for the next 24 minutes. So you got 24 minutes to get yourself signed up. Once we finish, it's going to go back to $12.95. All right? Get yourself to optionspaycheck.com. Get yourself registered. And I know $9.95 it's an ask, but think of it how much you're going to learn, or how much you're going to lose by not learning this, right? How much is it costing you? How much will you miss out by trial and error? How much energy and time are you going to spend trying to figure this out on your own? Then ask yourself, if you could reproduce Bruce or Brian or Joe, how much can you make if it works? There's an old expression that the best time to plant an oak tree is 20 years ago. The next best time is now. Okay? Do it now. Don't wait. You can be under that oak tree enjoying the shade in a few years. Get under the tree. Plant it today. Go to optionspaycheck.com. Get yourself registered. Now, before we break into the Q&A, I want to cover a couple more important points because these are questions that are being asked. First off, Ron, you said the class starts tomorrow. What do you mean? Well, let's talk about that. When are the live sessions? What if you miss one? Tomorrow, we are going to do at 5 p.m. a welcome session. That welcome session is just to get you all in there, explain to you what everything is, where you can find all the resources, etc., etc., etc. Now remember, we release all of the material up front. So you're going to have all 8 modules that you can watch. But what we recommend is you do 2 modules a week. Okay. The first week of the course, I want you to finish module 1 and module 2. We're going to have mastery live sessions to do Q&A sessions on each of those modules. You can watch the modules on your own time, and then we do a live Q&A on Wednesday the 3rd and Thursday the 4th. Then the following week, it's modules 3 and 4. Again, you watch the modules on your own, then you come into here and we answer questions, do the assignments, really just make sure you understand what's going on. Then you can see for the rest of August how it lays out. Those are at 5 p.m. Eastern time. Then also on Friday at noon, we do a Q&A. Those are all Eastern time. The Q&A is a good weekly wrap up for the modules that you had. This one would cover all 4. This one would cover the first 6. This one would cover the first 8. And in the month of August, you will learn how to trade the options paycheck system. That way, come September, you are ready for implementation month. At the beginning of the week, I lay out my live trades, my SPX and credit spreads. You come into the class, you watch me find the trades. I'll set them up in the broker. I'll show you where my stops are. I'll show you how I find the stops, all the things you know to place the trades. Then on Tuesdays at 5 o'clock, we're going to do an office hours. Now that's a little bit different the week of the 5th because of Labor Day. We push it out a day. That's going to be your office hour session. You can come with us and we will go over the trades that we place, any questions you have, maybe if you have a management question on a trade you placed, etc., we'll answer those. Then on Friday during the month of September, we're going to have a noon office hour session. Okay, that's again just going to wrap everything up, even have an opportunity for us to find some more trades. You know, one of our clients, Bruce, said, I feel confident to start placing trades now. I know exactly how to monitor and adjust them. It's exactly what I wanted. Okay, I'd absolutely recommend the course. It was designed in a very orderly and clear manner, and it might be the best step-by-step course I've seen. And I've been teaching investing concepts for 35 years, so I think I'm a good judge. Now, another question we get is, well, around how much options experience do I need? We've pulled prior course attendees, and we've gotten back a response of 83% said that you can do this with little to no prior options experience. That wasn't good enough for us. Part of our redesign of the options paycheck experience here in 2022 was to build on that and give you more introductory options experience. That way, we're going to next time we do a survey, we're going to get up to 100%. I'm one of those parents. Oh, you got a 92%? Well, there's room for improvement. Not really. A couple more clients of ours, Cheryl, have surpassed my expectation. I don't need the money back guarantee because I tripled my investment. We already talked about Bruce. Frank, after taking the course, I already have a profit of $7,300. Before the course, it was a crapshoot. Now I believe in the options trades I'm doing. Cam, I've made back my initial investment many times over. Even though it's a small part of my portfolio, it's probably the most profitable. Hugh, we've already talked about. Jake, I finally found a method of making consistent winning trades with a high probability of success. So again, if you are interested, now is the time. Get that $9.95. Go out there, get yourself registered. Go to optionspaycheck.com. Okay? Optionspaycheck.com. All right? Now, what I'm going to do now, if you're in, by the way, let me know. Hey, say, hey, Ron, I'm registering now. I'm in. Let us know in the chat window. I'm going to bring on my colleague, Brian. He's going to come in. He's been one of the guys in the background answering questions throughout the class, and we're going to have a really Q&A session, a quick Q&A session.
Awesome. Hey, Ron.
Hey.
All right. So like you said, as soon as you were talking about joining you in the class, we had several people typing into the box saying, I'm in. Like Mark says, done. He had said, sign me up. And in fact, I shared with the group, Jim typed into the chat box. He said, I just took this class. It was awesome. So I thank Jim for typing that in as one of our alumni of the class. So those of you who are in, please check your inbox because you'll get an email from us with all the details. You get the dates and the times. There's also a link for the Facebook group, which you could join. And primarily, there's directions to access the course because like Ron said, it's all available right now. Right? So you can go in there. And this week, actually, the first live class is tomorrow. So you might want to spend a little bit of time tonight, brushing up on some of the things in Module 1. In fact, tomorrow's live session is a welcome session. So you actually have today and tomorrow to start watching Module 1 to be ready for the first mastery session on Wednesday. So we look forward to having you join. Remember, the discount is only available for about, I don't know, 20 minutes? A short amount of time. So just head on over to optionspaycheck.com. And so, Ron, I did have a couple of questions that had come in. into the chat. So if you are ready,
I
I'll
am
send
ready.
them over to you. All right. Now, some of them I know you had addressed during the session, so maybe after they typed them in, you had answered them, but I'm going to ask them anyway, just in case. But we had somebody say, I'm going on vacation during August, and they wanted to know if that's still okay, if they miss a few live sessions, or how does that work, or will they be behind, things like that.
Well, the course, on a good note, is kind of self-paced, if you will. You can watch all the 8 sessions whenever you want to. Now, of course, the live stuff is a week to week thing. I would say that, listen, if you're going to miss 2 or 3 sessions, it's not that big of a deal. And really, even if you miss 2 or 3 sessions live, you can always go back and watch the recordings. But I always say, listen, if you're going to miss more than a week of the live sessions, maybe it's just better if you take it, when we offer it again. We do offer it, quite often, time to time throughout the year. So if you're going to miss more than a week, I'd probably just tell you to wait until you have a little bit better control of your time. But everything is recorded out there. So if you wanted to do it, you certainly could. At least I would say this, just make sure you're available in September, because September is where we do the live implementation. And that's really where you're going to get a lot out of it. So make sure that you're available in September. That's really the key for me.
All right, cool. And this one's from Norman. Norman said he had taken the class several years ago and wanted to know if there was a discounted rate for alumni. And the answer is yes, Norman. I'll have our teammates in the background give you a private link. In fact, you should have gotten an email this weekend as an alumnus of the course with a private link to retake the class. So there's a link there, or you can call our office, or my teammates in the background will give you a link. But I'm going to put a phone number in the chat for you or anybody who wants to call. The reduced rate for an alumni, for all the alumni, is $495. It's a killer deal for alumni if you want to retake the class. But 888-658-7638 is our phone number. I'll just put that into the chat for you. And oh dear, I almost forgot, Ron. I almost forgot the little checklist.
Yep.
So let me put that into the chat, but actually in the handouts area. So right above where you are typing to us in GoToWebinar, there is a spot that says handout. So please check that. That's where I put the little PDF checklist that you can download. And those of you who are listening in on YouTube, I'm going to put a link into the chat for you. And then you could download that. You have to put your email address in, you can grab it. All right. So there it is. All right. So Ron, back to the questions for you. So there was a question on YouTube about, it doesn't quite give a name, it's kind of an abbreviated name, but it says, my concern is that if everybody is using the same system, it's going to become less effective as it needs enough counterparty interest maybe to take the opposite side of the trade.
Right.
Well, what would you say to something like that?
I wouldn't worry about it. I mean, I've been doing this for over a decade now. I've been teaching it for years and years and years. Remember, the thing is, we're trading options. So it's kind of interesting. I was doing a trade today in actually one of my live classes. And in the matter of 30 minutes, my class has added about 350 volume to an option. 350. It went from 47 volume to like 400 volume as soon as we looked at the trade. No problems. Every one of us get filled. No problems at all. I've not run into this problem at all in any of the stuff that I've done, whether it's been day trading. We're just such a small cog in a $1 trillion space. We can't really affect things. And there's people out there trading options for all different reasons, that you're never going to have a problem. We actually talk about option liquidity in one of our modules, or, so we actually cover that and make sure that, we're not going to be out there trading by ourselves, essentially.
Yeah, one of the gentlemen you mentioned, Bruce, he shared with the alumni, he shared with everybody, he was trading a several $100,000 account, trading the SPX trades and with zero problems. So, and give you a little bit of confidence there. And so, Ron, I want to go back to this. It wasn't necessarily a question that came into the chat box, but you did a presentation this week to the VectorVest clients where we were talking about generating income and how inflation has been, definitely a hot topic. But with people worrying about inflation and everybody's worrying about paying the bills and how to generate more money because things are getting more expensive. How this system has got to be even more important than it has been over the last several years. So maybe kind of touch on how you've been able to kind of combat inflation by doing the thing that you've been doing every single year.
Exactly. That's exactly right. We haven't changed a bit. We haven't changed our approach. We haven't changed our plan. And here you are in a bearish market, and we're still on our pace for about 3% per month. Like I said, I'm up about 19% overall this year. I'm actually going to show you guys something here. I have no problem sharing my results. One of the things that you're going to see this year is you're going to actually see, these are all of my trades, by the way. You're going to actually see that my win rate this year is actually much, much lower than it normally is. I'm actually not winning as much as I often do because the market's been a little bit more volatile this year. So my win rate is a little bit lower. But what you're also going to see is the fact that my average winning trade is only $600 and my average losing trade is only $500 when I take all of my trades into account, both stock trades and S&P 500. So even this year, now I trade very limited risk. Okay, I have $100,000 in capital that I use. Now, basically what you're seeing over here is my average risk is 0.05. I'm risking a half a percent on my account. I guess technically you say 0.5%. I was thinking in terms of decimals, but I'm risking a half a percent of my account. I don't like to risk a lot of money. If I bump that up to a 1% risk, which is still pretty calm, think about that. My numbers would double for this year. And I'm already up 19%. Okay. So I'm well on pace to getting this done this year. And, it hasn't been that difficult. It really hasn't been that difficult. Yes, my trade winning percentage is a little bit lower this year because of that. It was actually a little bit lower in 2020 as well, but I had one of my best years ever at 63%. So the cool thing about this is inflation, whatever, it doesn't matter if you have a good system. A good system overcomes all that.
All right. I saw Nala, you're typing in about Thinkorswim. That's actually the software that Ron uses in the coaching. So all the trades that you'll see Ron do and all the examples that we showed in today's webinar showed screenshots of his trade log in Thinkorswim. Now, the results that he was showing right there, we had to use a third-party tracking program because basically no broker is really good at tracking your trades. So this is a third-party software that we had to purchase to compile the results in an easily shown method to you and everybody else on the webinar. But all the trades that Ron does, he uses Thinkorswim. And those of you who don't use Thinkorswim, Ron has several companion videos for things like interactive brokers, E-Trade, so you could see what it's like to do it in other brokers as well. All right. So Ron, a couple other questions about, we had Norman here, who was an alumni. So it made me think of the help that you give to alumni, because people are thinking, all right, this is great. I'm going to take the class. I'll learn during the class, but then afterwards, I'm kind of all by myself. So maybe what kind of support do people have afterwards, after the class is over?
Sure. Well, as you saw earlier, we do have an online support community on Facebook. And in that support community, we do once a month Q&A sessions. So you can ask questions of us once a month. We go in there just to make sure everybody's still on track. I also read questions on there from time to time, and I might post a response to something. But more importantly, you get a private dedicated email address, and that private dedicated email address doesn't go away. I have people that email me all the time that took the course a year ago, 2 years ago, 3 years ago, 4 years ago, and they still ask me questions from time to time. So you will always have access to our team via email as well. So we do offer ongoing support.
All right. Well, let's see. You definitely answered this one. I remember you saying it about, can this be done in a retirement account? So unless somebody has a question, after typing that in, if you still have a follow-up, let us know. But why don't we do this? If you do have a question, type it. We'll give you one last chance to type it into the chat. Let us know. And what we did is actually, Ron, that page, since there was some interest in the chat and some people were saying they were on the phone and they had to go on hold, we actually extended it. Instead of 8 minutes, it's probably going to go for another 30 minutes beyond that, probably until about 7 o'clock Eastern today. So you have a little bit of extra time, but don't wait. Even though it's going to go up to 7 p.m. Eastern time, just to make sure that we can get all the orders in. Don't hesitate, because tomorrow morning is the last day to get in. So you have 30 minutes from now basically to take advantage of the $300 discount. Then it's going to go up to $12.95, which is still a great deal if you can look at all the results that Ron was talking about today and the results that Ron has gotten himself. Just in his trading account, he's had, what is it, 5 out of the 6 months, Ron, where you were well over that. Mm-hmm. So the registration closes tomorrow morning at 10 a.m. Eastern. And then we close registration. Nobody else can get in because we have to figure out who all the students are, make sure everybody is in for Ron's first live session tomorrow afternoon. All right, so today is basically your last day, other than tomorrow morning. So get in while you can. And I don't see any questions, any straggling questions, Ron. So why don't I pass it over to you so you can wrap things up for the night?
All right. Well, thank you, Brian, and thank you to the rest of the team in the background answering questions during the class. And most importantly, thank all of you for attending with me this evening. Hope you got some good value out of it. Hopefully, you've got a good idea now how to create income. And more importantly, hopefully you're signing up, because I'm really looking forward to spending the next 2 months with you, showing you how to implement these things and really get some income going. So thanks once again, everybody. I appreciate your attendance. I wish you all of the best of success as you trade and go forward. Good evening, and thanks again, everyone. Take care.